Good afternoon everyone and welcome to the Morrows monthly update for August. The month of August saw the markets dominated by fears that the US Federal Reserve would start to wind back its stimulus program. This had a particularly large impact on emerging markets, which saw their currencies, bonds and equities sell off aggressively. The Australian equity market outperformed most of its global peers throughout August, rising by around 3%. Broad-based global equity markets fell 2% for the month. Global bond yields continued to rise on talks of Fed stimulus tapering. The one exception to this was Japanese bond yields, which did fall, and also European peripheral bond yields fell. Commodities were generally stronger across the board as tensions in the Middle East rose. Gold was up around 5%, oil rose 2%, and iron ore prices were up 6% for the month. The US dollar was relatively flat against most of the major currencies, and the Aussie dollar traded in a range of between 88 and 92 cents relative to the US dollar. US economic data was stronger during August, with both manufacturing and services sectors picking up. There was also an upgrade to second quarter GDP growth. The one disappointing bit of data from the US was a weaker than expected jobs growth number. However, the unemployment rate did fall. In Europe, the economic data continues to be mixed. On the negative side, we saw a weaker than expected retail sales number, and also unemployment remains at record highs. However, positives for Europe were better than expected business confidence, industrial production and manufacturing, and we also saw flash estimates for second quarter GDP growth turn positive for the first time since 2011. Chinese economic data also picked up during the month, with the manufacturing sector moving back into expansionary territory for the first time since April of this year. Industrial production and trade data was also stronger than expected. In Australia, the data continues to be soft. We've seen business confidence weaken, and also retail sales came in lower than expected. The unemployment rate was flat, although we did note that the number of full-time jobs created has now fallen for 3 consecutive months. At its September meeting, the RBA left rates on hold at 2.5%. As we move through September, the markets will be focused on a couple of key events. These include the upcoming Australian election. US Congress meets early next week to discuss potential military action against Syria. The US Fed meets to discuss potential tapering of its stimulus program. And Germany's election result could have impacts on further bailout packages for Greece. And also later this month the US debt ceiling will be reached, so discussions will be needed there. Now these events will act as either tailwinds or headwinds for the markets, and given their importance, volatility is likely to be heightened over the coming weeks. In this environment, we're participating in market upside, but we also have strategies in place that can protect against market downside. We thank you for your time, and we look forward to talking to you again next month.